In a world of uncertainty, dividend-paying ETFs stand as a beacon of financial stability. They're the pillars of strength in an unpredictable market. These ETFs are often overlooked, yet they are the bedrocks of a balanced investment portfolio. They create a consistent flow of income that can be relied upon no matter the state of the market. Moreover, they hold potential for capital appreciation, which can significantly enhance your investment returns. But that's not all. They also serve as a safe haven during times of market turbulence, offering a much-needed respite from the chaos. So let's not waste any more time. Today, we will delve into the top 5 dividend-paying ETFs that hold the potential to outshine others. For the upcoming year 2024, these are the ones that deserve your attention. First on the list is the ProShares S&P 500 Dividend Aristocrats ETF, NOBL. This exchange-traded fund is a unique investment opportunity that offers you an exceptional way to enhance your portfolio. It allows you to gain exposure to premier companies, specifically those recognized as blue-chip firms. These companies are renowned for their financial stability, longevity, and consistent performance in the fluctuating market. What's unique about these blue-chip companies featured in the ProShares S&P 500 Dividend Aristocrats ETF is their impressive track record. For a minimum of 25 unbroken years, they have successfully increased their dividends. This persistent growth in dividends showcases their financial prowess and resilience, regardless of market conditions. It's an impressive characteristic that sets them apart from competitors. By investing in this ETF, you're not only banking on the stability of these proven performers, but also leveraging the power of passive income. Dividends are a form of regular income that can act as a reliable cash flow, supplementing your primary income or contributing to your savings. This investment strategy is a smart way to invest in the stability of proven performers, while also reaping the benefits of regular income. Next, we have the Vanguard High Dividend Yield ETF, VYM. As a unique type of investment, this fund capitalizes on the prosperity of leading American corporations that regularly deliver high dividends. Such companies typically have a robust financial position, a stable business model, and a track record of generating substantial profits. By focusing on these high-yielding entities, the fund provides investors with the opportunity to earn a lucrative income, widening their profit margins. This concentration on high-yielding U.S. companies allows investors to benefit from the success of these firms, digging a well of steady cash inflow. This unique attribute makes it a prime pick for individuals seeking to augment their income through a steady stream of cash flow, serving as a safety net in times of financial uncertainty and volatile markets. It can be a suitable choice for both short-term traders and long-term investors. Beyond the prospects of higher returns, it's also managed by Vanguard, a company universally distinguished for its low-cost index funds, adding an extra layer of credibility and reliability. Despite market fluctuations, Vanguard remains steadfast. It's an investment titan with a reputation for affordability and a strong diversified portfolio. Also, with Vanguard's commitment to low costs, investors can rest assured that they are not eroding their profits with high fees. In conclusion, this ETF offers a high potential for income, making it an ideal choice for investors seeking a steady cash flow. Moreover, it's managed by Vanguard, a company renowned for its low-cost index funds. Our third pick is the SPDR S&P Dividend ETF, SDY, which specifically targets companies that have exhibited a consistent growth in their dividends for no less than 20 consecutive years. This strategy is based on the principle that companies that can consistently increase their dividends over such a long period are likely to be highly resilient, financially robust, and possess a strong track record of profitability. These are not your typical companies. These are industry leaders, financial powerhouses that have stood the test of time, weathering numerous economic cycles, from boom periods to recessions, and yet have managed to not just survive, but thrive. They have shown an ability to adapt, innovate, and maintain a steady cash flow even in the most challenging times. This makes the SPDR S&P ETF, SDY, not just an attractive, but a compelling investment choice. Its focus on companies with a long history of increasing dividends provides a level of stability that is particularly appealing to long-term investors. The consistency in dividend payments can often translate into a reliable income stream, making this ETF a solid choice for investors who prioritize income growth and capital preservation. Therefore, whether you're a seasoned investor or someone just starting out, The SPDR S&P Dividend ETF, SDY, is worth considering. These are the firms that have demonstrated resilience through economic cycles, making this ETF a solid choice for long-term investors. The fourth ETF is the Ishares Select Dividend ETF, DVY. This exchange-traded fund represents a popular choice for investors seeking a stable income stream. It is designed with an objective of tracking the investment results of an index composed of relatively high dividend U.S. equities. DVY accomplishes this through its strategic selection process, rigorously focusing on 100 of the top dividend-yielding U.S. securities. These securities are the very essence of what makes this fund so fascinating. They represent the pinnacle of businesses that prioritize returning capital to their shareholders, providing a sustainable and potentially lucrative income source. This investment opportunity is particularly attractive to those looking for exposure to companies that have demonstrated an unwavering commitment to their shareholders. These are entities that understand the importance of consistent yield, rewarding their shareholders for their loyalty and faith in the company's potential. Overall, being a part of the iShares Select Dividend ETF, DVY, is a great way to tap into the potential of companies that are committed to returning capital to shareholders. Last but not least, we have the Schwab US Dividend Equity ETF, SCHD. This ETF, or exchange-traded fund for those unfamiliar, is a sort of investment fund that is traded on the stock exchange. Much like a mutual fund, an ETF holds assets such as stocks, commodities, or bonds, but with a unique twist. SCHD in particular offers diversified portfolio of high dividend yield US stocks. What exactly does that mean? Well, high dividend yield stocks are those that pay out a relatively high percentage of their earnings to shareholders in the form of dividends. These dividends can be a fantastic source of passive income for investors, making them a highly attractive option. SCHD touts a low expense ratio, making it an excellent choice for those who are financially savvy and cost conscious. Expense ratios can eat into investment returns significantly, so a low expense ratio can be a huge advantage. This fund is, therefore, an excellent choice for cost-conscious investors who are in search of both income and growth opportunities. With its focus on high dividend yield stocks and its low expense ratio, the Schwab US Dividend Equity ETF, SCHD, is certainly worth considering. Each of these ETFs brings unique features and benefits to the table. Whether it's the stability of dividend aristocrats, the potential of select firms, or the efficiency of low expense ratios, there's an option every investor. To invest successfully, understand your financial aspirations and align your scheme accordingly. As we conclude, a reminder, appreciate this video by liking it, and remember to punch the subscribe button for caffeinated money. We're here to help you grasp investing aspects. Consider investing as a journey, and every journey needs a trustworthy guide. Allow caffeinated money to be your guide in finance. Here's to constructing a future of affluence and financial security.